Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to be taking a look at the week ahead analysis. We're going to go through the news for this week and some charts of interest. So starting off with the news, we have a lot of data. It's kind of one of the biggest weeks for data now for the end of the year, and we're going to see some big releases, mainly out of the Federal Reserve, as well as the Bank of England. We do also have some ECB stuff this week, so it's going to be a very, very volatile week, and we could see a lot of risk in the market. So basically, what do we expect from this week? I think, really speaking, it does kick off sort of Wednesday. Really, we have some pound CPI data, which is coming in forecasted to be a little bit better. That could give a little slight boost to the pound. We can actually see down here on the pound here on Thursday, we have the Bank of England official bank rate, and they are likely to keep rates the same. But you can see here I've just marked up, will they highlight the risk of the restrictions following the new COVID-19 variant? So in the UK at the moment, they have added some new restrictions, trying to tame the rate at which the Omicron variant is spreading. However, obviously as well in the UK, there are some interesting politics going on at the moment, as it was found that the Conservatives were basically having parties through lockdown when announcing lockdown. So there's been a lot of controversy around these new restrictions. So it'd be interesting to see if the Bank of England highlights anything about these restrictions following the new variant. So basically, we did see the Bank of England want to hike rates quite substantially next year. Will they put the brakes on slightly due to this? Before that, though, we have the Federal Reserve rate announcement and press conference. This is expected to be quite big. We're expecting the Fed to announce the speed up of the tapering measures as inflation has hit a significant high. So they're going to look to, I think, now take action. And we saw Fed Chairman Powell talk about this last week, and he kind of highlighted that there have been discussions already about speeding up the tapering measures. So it won't come as a shock if they do that to the market, but it's basically showing us that the US economy is very strong at the moment. I do expect some dollar downside. However, the US economy is very strong. I think where the dollar strength or weakness could come from is in which, do they give any kind of announcement to whether they will hike more than twice next year? Because at the moment, it's predicted that the Fed will hike twice. However, because of the rate of inflation at the moment in the US, are they going to take more action? They could do that by hiking rates more than twice. And I think if they were to announce something like that, we could actually maybe see a bit of dollar upside. But we definitely, I think, see a little bit of stock market upside. We have the sort of Santa rally to come. Seasonally, the stock markets are strong, which we'll touch upon in a second. So it could be a good week for the stock markets. May not be a great week for the US dollar. We may see that price continue to pull back, but we'll see what happens. Going on to the strength meter. The strength meter is still showing us that the US dollar, the Swiss franc and the yen are the stronger currencies, despite the fact that they are actually losing strength. So we talked about this slightly last week, that we could look for some potential reversals on the US dollar, the yen, and we are starting to see that weakness coming in on those two currencies. That's highlighting a risk-on sentiment in the market. So we saw Aussie Kiwi perform quite well. Despite that, though, the strength meter is saying Kiwi continue to drop lower into a reversal zone. So we could see a little bit of a reversal to Kiwi if the risk-on sentiment continues to remain. Going on to the dollar index then. I think it's all going to be what happens between these two levels. Is the market going to remain fairly flat until the FOMC announcement? Depending on the FOMC announcement and whether they talk about hiking rates more than twice. If they talk about hiking rates more than twice into next year, I think the dollar may break the highs around $96 or $96.50. If they don't, and they say they're pretty much on plan to hike rates twice next year, I think we may just see a continued move to the downside, as it should already be priced in the fact that they're going to speed up tapering measures. So we may still see that market pull back into that 94.55 level, but it's going to be a big week either way. We can see that the market is very sort of range bound here, and there's no clear direction on the US dollar at the moment. And we kind of touched upon this last week, that we need a kind of fundamental catalyst in order to push the market in a particular direction. So we'll see if that happens going into next week. Going on to pound. Pound could be an interesting market. Obviously a very volatile market this week due to the fact that we have the Bank of England announcement as well as the Federal Reserve. I think this could go, again, it could go either way really for the pound. I am expecting a little bit more upside due to the potential for the dollar to weaken slightly. But I think whatever case, we could probably look at last week's high and low. If the market was to break to the downside, we could see price move towards 127. If it's to break the highs, then we could see a move up to 134, but it's going to be a very, very tricky week. We can see some buying coming back into the market at the moment, but it's going to depend if those fundamental factors can back that up. I think if we did see price sustain above sort of 133, then that could be positive for the pound and we could see some upside. Kiwi then. Kiwi is really going to be affected by the risk on sentiment in the market. If the risk on sentiment remains and the market sees the Fed announcement as a not necessarily negative but a bit more dovish or already priced in, then we could see some upside to Kiwi. We have a nice bullish inside week at support. All I'd want to see is a change of trend. At the moment, we don't technically have it yet. We do have this inverse head and shoulders pattern. So if price was to clear around about 0.6820 and form a higher high, maybe we could see some further upside in line with the risk on sentiment. That risk on sentiment will largely be driven by the S&P 500. We talked about getting long on this last week in and around these areas because the market was forming a double bottom pattern at previous weekly support after a significant retracement phase. Risk on came back into the market and we had a very strong bullish week on the stock market. We had a little bit of downside earlier in the week, or a strong burst earlier in the week. Very flat middle to end of the week. But I think this upside will likely continue, and if we break out of these swing highs here, we could see some further upside. We could see prices breaking into all-time highs as we move into sort of the Santa Rally territory. So hope you enjoyed this video update. If you did, leave it a thumbs up, subscribe to the YouTube channel to see some more of our Forex content, and I will speak to you in the next video.